Hey, what's going on, everyone? It's LT's Missing here, coming at you with a brand new video. And I'm going over an update of my investment portfolio in the stock market with Webull. So I love Webull, due to the fact that it allows me to invest a minimum of $5 into different stocks or ETFs, and does not charge any trading fees. And also, if you create a Webull account and deposit a certain amount of money, you can get free stocks as well, all the way up to 75 free stocks if you deposit enough. So, this right here allows for people to do those investment strategies of $5 per day, $5 per week, or whatever the case may be. Right, start with a minimum of $5, and the only thing is that when you get inside of these shares and you activate the drip or the dividend reinvestment program for different stocks and ETFs, you got to have a minimum of $1 in dividends in order to reinvest it. I don't know how it is with other traditional brokers, but with Webull, that's how that works. Okay. And so now with that said, before I get going into this video to show you the changes in my portfolio, you should have taken time out to read the disclaimer at the beginning of the video to understand what's going on the channel at all times. If you're not going to do that, please go back and do so that way we're on the same page. So with that said, let's get into this video. Now, you can see where my portfolio is at. Really haven't changed much because of the fact that I have not deposited any more funds into my account, but I have made some adjustments, and which I'm making one more slight adjustment in my portfolio. I'm ending up selling my FEPI position and then distribute those funds amongst other solid positions that I have. So what I'm going to be focusing on, I got rid of all the YMAX ETFs, and I start following, more people I start to follow and learn from on YouTube. I start to understand how my portfolio look going forward. Because the thing I was struggling with is focusing on my dividend growth as well as my portfolio value growth. And when you talk about, there's so many different companies in the stock market, right? And I'm looking at like, okay, should I invest to Amazon? Should I invest to Tesla? And should I invest into like 7-Eleven, where the case may be, right? There's so many different companies out there. And I came across another YouTube channel just a couple days ago, and this lady, which I will show you here shortly, is she actually reintroduced me to the power of investing into REITs. So real investment, real estate investment trust. And so now that I understand that more, so I got 3 REITs in my portfolio now that I'm gonna be focusing on going forward, right along with me investing into QQQY, IWNY. These are 2 weekly ETFs, 2 weekly dividend paying ETFs, and IWNY just converted to becoming a weekly dividend paying ETF. Then I'm also holding JEPQ. And like I said, I'm getting rid of FEPI, and then I'm gonna be holding on to BITO. BITO is going to be is one of those high dividend paying ETFs, as well as a possible high growth ETF. So in the future, I can look at selling some of my shares of BITO, and I can increase my holdings into the REITs or JEPQ going forward in the future. So that's how I'm gonna have my portfolio set up going forward. And then as time goes along, I can be able to diversify my portfolio even more. Okay, so now let's go ahead and let me switch over to who introduced me to REITs. So Ashley M. Fox, she is the lady. She's the real deal, by the way. She went to Howard University, graduated from Howard University in the United States, and went to work on Wall Street, managing portfolios of rich people of $25 million and plus, helping them grow their portfolios even more. And that's when she discovered the power of investing into REITs and dividends every single month or quarterly. So she mainly focuses on helping people understand about investing into REITs and why you should invest into REITs. And then she also talks about growth stocks as well as dividend stocks. Okay, but mainly she is talking about REITs on her YouTube channel. She talks about this as well on TV. So she's on TV on the Yahoo Finance and everything like that. She has her own company, Amplify, that she started from scratch. Once she left Wall Street, she lost everything, and she had to go back to Philadelphia, hometown, and end up sleeping on her mom and dad's couch. and she sold all of her stocks to start her company Amplify. Now her company Amplify is one of the fastest growing companies in the United States. You can check her out and everything like that, but it's thanks to her that I understand the power of REITs, because now it allows me to have ownership of a lot of the properties that hotels and big time businesses or corporations are renting out to be able to operate out of. So now, instead of me having to worry about, should I invest into this big company, Walmart or Chipotle, or whatever the case may be, I can just own the REITs, and I'll be able to get paid monthly or quarterly dividends. All right. So thanks to her, that's why I got involved with REITs. So you come over here to my portfolio now. Let's go to analytics, and you can see how my portfolio is diversified. And so I'm loving the way that this right here is showing up right now. And as time goes forward, and when I feel more comfortable with where my positions are at, I'll be able to possibly add more into my my portfolio to diversify even more so. So when you look at IWMY, for example, you can see the top holdings right here. And so it's a high risk, high dividend paying ETF that pays out every single week. They just convert it to weekly dividends. And as a matter of fact, when you come up here, you can see that it's showing that they paying weekly now. Okay, and let me see. They got ODTE. I don't know if that is okay. Yeah, I don't know what that is right there. But anyways, it's weekly for IWMY, and you see the expense ratio is 0.99%. And when you come up here to the dividend yield percent, 63.32%. Paid out annually at $21.85. That's very high and it's very good. So just think about what you'd be able to do if you was able to own even 100 shares of IWMY. And then also QQQY is the other dividend, the ETF that's paying out weekly. The last price going for $34.68. Got an expense ratio of 0.99%. You can see they're holding the same thing, similar pretty much to IWMY. And so when you come up here, like I said, it's paying weekly. Let's go over here to QQQY real quick, and you can see that they're paying out dividend yield of 51.92%, 17.93%, $17.93 per year. So if you had those two, 100 shares of each, you can pretty much be earning like an additional $4,000 per year. What could you do with that extra $4,000 per year to help you grow your portfolio even more so, right? And now I'm not going to be dumping my money into these two ETFs, on a monthly or weekly basis or anything like that. I'll be able to, add more shares every single month to the point to where I can be able to use the dividend payouts on a weekly basis to diversify or increase my shareholdings in the REITs or JEPQ going forward. All right, so that's what I want to be able to do. Once I get to 7 shares each of these, then it's going to be over $5 per week that I better earn in dividends. Then I can put that into one of the REITs, and then once I get to 15 shares each, then I should be making earn over $10 in dividends per week. Then it's going to help me diversify into the REITs even more so as well. All right, and so on and so forth. So now you understand why I'm inside of IWMY and QQQY and what my strategy is. These are the REITs that I'm involved with. So you got Realty Income. Everyone should already know about these guys. So you got places like 7-Eleven that's renting out space with these guys. Let's go right here through it. You got Chipotle right here in the list as well. And you got resorts and casinos that are renting out space from Realty Income. And you got Sainsbury's as well. And I think, let me see, let's go one more space here. And they got, of course, big warehouses for like Amazon, for example. And then they also just bought the Bellagio hotel and casino in Las Vegas. So everybody should understand what Realty Income is all about. So when you come over and we look at what they're doing, the last price was at $61.75. They got dividend yield percentage of 5.12%. And they actually been paying out for 27 years straight. And also they're paying out monthly dividends. Okay. So they take pride in paying out monthly dividends. Okay, so that's another reason why I'm investing into them. They own a lot of properties, a big portfolio of properties. And then perhaps the biggest REIT there is Simon. And the reason why I'm investing into them is, you got the shops at Crystals that they own. So that's right in Las Vegas. They got Woodbury Common Premium Outlets, Central Valley, New York. You got Sawgrass Mills, Sunrise, Florida. So you look at these places right here. These are whole strip malls and everything like that they're owning. And so they bring in a whole lot of money. And it's not just investing in the United States. They're also investing into Europe and I believe in Asia as well. So this right here is perhaps the biggest REIT there is in the world. And when you come over here and when we look at SPG, it's going for the last price of $170.78 per share. And you see that dividend yield is 4.8%. And then these are paying out quarterly. But look at the dividend amount. Yes, I know you got to spend a lot of money to own one whole share in order to get this kind of dividend payout. But the thing is that these REITs are about to go up in value as well as in dividend payouts. I believe, thanks to the information that Miss Ashley Fox has shared on her YouTube channel, because due to the interest rate cuts in the United States, and they possibly can cut more rates next month. So when you look at that aspect, then all of these REITs, for the most part, should start to take off even more so, and value, and also paying out more in dividends. All right, you can see what SPG has been doing. They've been paying out higher dividends, it seems like, on a consistent basis. And during the financial crash back in 2008, they had dropped down to like $50 per share. I didn't know about the stock market at the time, of course. I mean, I knew about the stock market, but I was not interested in the stock market at all. So the thing is, now that I know I missed out on that opportunity, but I'm not missing out on opportunities like that in the future. So if there happens to be another real estate crash, and of course all of the stock market is going to go down, but you can still get paid out in dividends by owning these REITs, of course, right? So now you know about that one. GNL is the riskier one, but when you look at the properties that are paying them for the space that to operate their business out of, you got Bob Evans, Bridgestone, you got Buffalo Wild Wings, Burger King, Burlington, Chase, Chevron, Chick-fil-A, Circle K, City National Bank, Citizens Bank. You got CVS Pharmacy. What's this one right here as well? Let's keep going right here. You got Davita, Dick's Sporting Goods, Dollar General. Dollar General got many locations all across the United States. I actually used to deliver to Dollar General. You got Domino's Pizza, ExxonMobil. Family Dollar got many locations. FedEx Ground. So FedEx. Got Field and Stream, Fifth Third Bank, First Horizon, Five Below, Food Lion. They don't have a lot of locations anymore, but they still exist. And then you got the Fresenius Medical Care, Harper Freight, Hobby Lobby, Home Depot, Home Goods, IHOP. The list just keeps going on and on and on. You get the point, right? So when you look at GNL, it is a higher risk the REIT, but it's a risk I'm willing to take. It's paying out dividend yield of 13.38%. Got an annual payout right now of $1.10. So the value of the ETF has dropped, and this is the opportunity to buy in cheap, right? So you can own a whole lot of shares. To get a whole lot of shares, you see the price at the close of yesterday was going for $8.22. All right. You come to overview, you can see what it has been doing. Let's go to year to date. And so it's down. It has gone down, but with the interest rate cuts happening, we can hopefully expect GNL to go up in value as well as pay out higher dividends going forward. When you look at all of the properties that they're managing, right? So you see, the properties speak for themselves. If you know any of those properties, you know that they're worth a lot of money, right? They're doing pretty well. Food Lion, I won't say so much like. Back when I was a kid, Food Lion used to be way more popular than what it is today. But anyways, you can see that the dividend has decreased as like the management expenses and everything like that came very, very hard for them to manage, although they're still paying out dividends. So I'm taking a chance with them, hoping for a reversal and the dividend payouts to start increasing. And that's why I own 10 shares currently, and I'll be looking at adding 2 to 5 shares every single month. And I want to get this up to 100 shares and then 500 shares and so on and so forth. Same thing that I have planned for all of the REITs that I'm investing into. Now, some of it's going to take longer than others because of the value, the value of each share. But this is what I am focusing on. And so when you come back here to the dashboard, with the way that I got things set up right now, I will be getting rid of FEPI, which is this ETF right here. So this is a high dividend paying ETF on a monthly basis, but I will be getting rid of this position and just focusing on the weekly one, high dividend paying ETFs, and then my current positions with Bitcoin and the REITs and JEPQ. All right, so you come down, let's go back to the dashboard, and we're gonna go right here to my goals. And so last time when I showed you this, it was showing that I could reach $100,000 per year, $100,000 plus per year in 6 years. Right now it's at 10 years, and that's due to the dividend yield percentage dropping way down because of me investing into REITs and JEPQ. So more sustainable opportunities. And although yes, the high dividend yield percentage are very attractive, but you got to understand that eventually they won't pay out dividends anymore eventually, and then you have to try to move your money to something else. And so instead of me doing that frequently, I just focus on the 2 weekly dividend paying ETFs, as well as more controllable ones like Bitcoin. I know BITO is a high dividend yield one, but I believe that that's going to be sustainable when you look at the fact of the matter of that Bitcoin is about to go on a massive bull run, could possibly get to $200,000, $300,000 as a max during this next bull run. So imagine the growth of BITO for me. I'd be able to sell shares in the future and then be able to diversify right into my REITs and everything, and JEPQ as well. So that right there is going on. So dividend growth as well, showing 0.06%. And so yeah, that's what's going on with my goal. And now when you come over to the dividend, let's see, let's go to analytics, go to dividends. I'm looking at right now currently $231.54 annually, which is an average of $19.30 monthly. Like I said, this is going to change once I get rid of FEPI, and I'll be able to use this holding, the money I got invested into this holding, and put it into the better opportunities. Of course, I will keep these 3, and and then I'll be able to hold on to GNL, JEPQ, O, and SPG. Okay. And so that's what's going on with my dividends right now. Outlook on that. When you come to the dividend calendar, now I'm hoping that BITO will not go according to what Snowball Analytics is showing right now, based off his past history. And because right now it's showing that BITO is going to be going down to let me see, over 14 cents per share for dividends, and next month. So if it updates to where it's paying out a higher dividend, that's going to be even better for me, right? But when you look at this calculator, this calendar, you can see every week IWMY, QQQY paying out dividends, right? And I'm gonna keep on investing into these every single month to increase the amount of dividends I'm getting on a weekly basis, so that way I can eventually get to at least $5 per week and invest into the REITs and everything, and keep growing my REITs. So this is what it's looking like on a monthly basis. So this month right here is not going to be getting me $29 because I got rid of the YMAX ETFs. They just have not updated for some strange reason. So it's still showing Connie, Misty, MVDY here. I didn't get paid with HYG because I got rid of it before then to get involved with some other opportunities. And that, just like I said, I've been making a lot of changes, just trying to find that right combination for my portfolio. And I believe I got it now. So, but anyways, you can see that they got FEPI here as well, which I will get rid of, and just focus more on, like I said, I've already been saying that I won't get in the SPY because I sold that position early on. And yeah, that's the reason why it's showing that, MVDY is what I don't have anymore. Although it showed that I was supposed to be getting paid a dividend, never received it. So I don't think the YMAX ETFs could possibly be paying dividends anymore. I don't know. I could be wrong about that. But literally on the ex-dividend date, I did not get any word on Connie or Misty. I did get the ex-dividend announcement from MVDY, but I didn't get paid the dividend. So that right there is an issue in my book. You know, could I be wrong about them paying? Absolutely could be. Yeah, it was my first time investing into them, so I don't know if this type of thing has happened in the past or not. But the fact of the matter is that neither one of these two, I made an announcement for ex-dividend, how much they're gonna be paying out this time around. But MVDY did, but they didn't pay me. So, but anyways, though, that's the reason why that's showing $29. Going forward, you can see what it's going to look like going forward, although it's going to adjust once I get rid of FEPI. But this is what I'm trying. I'm happy. I'm sort of happy about, because although I'm going to be slowing down my dividend rate, which in the last video I was showing that I was making like well over $500 per year in dividends. But the thing is that I'm more in sustainable stocks and ETFs and everything, right? And that's what you want to be able to have a diversified portfolio like that. Now, some people just want to go low risk. Some people want to go completely high risk. And then you're going to have people like me who's going to have a mixture of both. And so that way it can help me grow my portfolio at a faster rate than just someone investing into low risk stocks and ETFs. All right. So that right there pretty much wraps up what I had to talk about with my portfolio for this time around. So if I make any more adjustments, which I am, I'll do another video. And I just want to if there's any updates I need to do before the end of before the next month comes, I'll do more videos. But I will do another video showing an update with me getting rid of FEPI and what I did to my portfolio lookout going forward. And then I just wait to do videos on a monthly basis about my portfolio, and then I continue doing videos warning people about online investment scams in the cryptocurrency space, as a lot of people are falling for the get rich quick opportunities like I did in the past. I didn't know any better, and because I didn't have anyone teaching me any of this stuff, right? So I had to learn through personal experience, just like what I'm doing right now with my investment portfolio in the stock market. And I just want to be just 100% transparent about everything and honest about everything, and to the best of my ability. That's what I'm about. All right. So if you like what you heard and saw, please subscribe to the channel. Also, feel free to share this video with other people. If you're interested in joining Webull, I have my link down in the description of this video, as well as in the comment section. Like I said, you can get an opportunity of getting free stocks if you create your Webull account and make your first investment of a minimum of $100. You can start receiving some free stocks. Okay. So that right there is all I have to say. Thanks for tuning in. I'll see you next time in this video. Take care, everyone.